Welcome to the Learning Pines YouTube. We hope this video helps.
In this video, I will explain how to use Telegram trading signals. First, understand that trading signals are actionable alerts suggesting specific trades, often including entry, stop loss, and take profit levels. Telegram channels provide these signals in real time, allowing you to react quickly to market movements. It's crucial to select a trustworthy signal provider to ensure the quality and accuracy of the information you receive, helping you make informed decisions. Before acting on any signal, prepare your trading environment. Choose a reputable broker that offers the assets you wish to trade, whether it's forex, crypto, or stocks. Set up your trading account with clear risk parameters, perhaps risking no more than 1% of your capital per trade. Finally, ensure your Telegram notifications are optimized so you receive signals promptly, allowing for swift execution when opportunities arise. Once you receive a signal, understanding its components is key. A typical signal includes an entry price, a stop-loss level to limit potential losses, and one or more take-profit targets. Your goal is to execute the trade as close to the suggested entry price as possible. Always set your stop-loss and take-profit orders immediately after entering the trade, adhering to the signal's instructions to maintain discipline and manage risk effectively. Effective risk management is paramount when using trading signals. Never risk more than 2% of your total trading capital on any single trade. Diversify your investments across different assets or even multiple signal providers to mitigate risk. Regularly review the performance of your signals and your own trading outcomes. This continuous evaluation helps you refine your strategy and adapt to changing market conditions, fostering long-term success.
Thanks for watching. Consider subscribing if we helped you.